Did you know if you invested $100 in Bitcoin when it first came out in July of 2010 and then sold it at its peak in December of 24, you did over $13.6 billion. That's one of the best returns in investment history. So my question to you is this: why are most financial advisors not recommending cryptocurrency? I'm gonna tell you why today on Mindset with Brad Barrett. Let's go. Welcome into Mindset. I am Brad Barrett. This is producer Jarrett, and as always, the lovely Kira. Today we're gonna talk about why financial advisors, I'm gonna say this word, hate cryptocurrency.
Hate it.
I hate them.
Yikes.
Look, there's a big debate going on, or I should say, a pretty wide gap between investors and cryptocurrencies. It's almost like we got this like protagonist, antagonist situation going on. And I wanna bring up some points today as to what I think why financial advisors, and why you might be feeling this from us, the financial advisors, why we have a little bit to say about this, and maybe some of our, what can be perceived as hatred, it's not, but what can be perceived as like pessimist about this, I think we're gonna go through today. But before we start on this one, we're gonna start a little new segment of checking in on the comments. We've been noticing our videos have been getting a lot of comments, some good, some bad, some funny, and we're gonna talk about it, because you know what? That's what we're here to do.
Starting off with my personal favorite.
Okay.
A short that didn't suck. Thank you. And congratulations, gold star for you. I was like, thank you. A gold star?
Gold star.
I remember getting gold stars as a kid. That was good. I have a question though. The way that's read, again, this is the beauty of comments. You never know the tone, right?
Right.
Is that they're saying that our shorts have sucked thus far and now this one doesn't suck? Or are they saying just in general they're watching shorts that suck and ours was good?
We're going to go with,
How did you read that?
because I'm so positive,
Oh, the positive, yeah.
that all
that's
shorts
you.
are terrible. We finally did the first good one.
I'm gonna
Right.
accept that too. I like that one. So
No
thank you.
matter what, that's growth, right?
That's
That's
gross.
Take it. You know,
Love it.
pain is pleasure to some.
Right. So then on our last minute tax tips to avoid deadline day drama, we got a whole bunch of all great in theory, but that's not how most people would handle it. And then, except this would get you fined. And then
Wrong.
And then, yeah, if you're making a lot more than your bills, agreed, most people get screwed on it. I like the tax return.
Yeah, I knew that one always triggers people. Keep commenting, let us know. We'll give you a shout out. We like it. Okay, cryptocurrency.
Crypto.
Everything you don't understand about money combined with everything you don't understand about computers.
Crypto is all over the world nowadays. It is completely in the news all the time. It has now shown up on CNBC over the past probably 10, 15 years as an actual asset class. And again, this video is really, look, this is lighthearted for us because we were having some real conversations as a team here authentically around this discussion. And it came up that here at One Capital, our firm, we don't have any assets under management that we manage over the $7 billion that are relative to cryptocurrencies that we oversee. These guys were like, hey, why do you hate on them so much? I'm like, okay, I don't know if hate's the word, but there are some things that we as fiduciaries look at that is a little bit different relative to what the cryptocurrency space brings.
I mean,
Let me just put
definitely
it that way.
look down or advise people. Like, it's pretty strong.
I'm looking at you with a smirk because I don't want to admit that, but I guess it kind of can come off like that. Like we kind of poo-poo like, oh, that's cute, your cryptocurrency. Now, I do want to point out something as we talk about this, that I am completely not naive to the fact that there have been millionaires made on cryptocurrencies. But like most investments, there's also been people who have lost tons of money as well. That's one of the things we'll talk about today. By the way, I should be clear, at some point in this video when you hear this, by no means are we promoting, talking, discussing. These are just comments we're making. Please don't go trade on this kind of stuff. We always say it at the bottom, you see on the screen, but just know that, okay? We're using these as example purposes for everybody.
And none of us are experts,
No, that's what I'm saying.
even
Look,
remotely.
I'm giving
Some
you the,
of us just learned what cryptocurrency is.
some are gonna be in my camp on this one, some are gonna be in your camp, some are gonna be in Kira's camp. Like, this is a good video for us to kind of come together as a community on. And I'm gonna tell you loud and clear, I'm happy to be educated on this. I've even told my clients who are really like gung-ho about it, I'm like, hey look, I'm not gonna sit here and say I know everything about it. I'm okay to be educated, let me know. But some stats that I found that were kind of interesting, and the biggest thing about cryptocurrency that I find, and we have different generations in this room. We got a 40s, a 30s, and a 20s. So If you're 50s and 60s or under 20s, comment, let us know if this pertains to you.
Apparently, I'm the older generation.
Yeah, I didn't say it, you did.
Jared's
all right?
old.
But there was a.
Say it.
He
kind of said it and looked at me.
Old.
I did. I pointed, but they don't know who I'm pointing at when they're looking at me directly. I could have been like this.
Well,
I do the box to box. They know.
right.
Right, now you know.
They know.
So there's some generational differences with this investment. That's why I wanted to talk about this. I don't think this is going to shock anybody. But a Gemini survey found that over half of Gen Z respondents in the US, 51%, had owned or currently own cryptocurrency, compared to 49% of millennials and 29% of Gen X. Okay, so we're talking like 40 to 45 and above, 29%. And right now I would say 25 and below as a general age range, 51%. So that's a big gap.
And to me, it seems like the younger people are adopting a new technology. So you're kind of getting this like the younger generations are accepting something new, where the older generations are simply just not comfortable with it, not accepting it.
Which that's true of most things in life.
Yeah.
I mean, that's not just cryptocurrency. I'm not unaware of
Yeah.
that. But that's a good point. So for example, Bitcoin, like that's a good example of one of the major ones that we talk about, or that people talk about, right? Bitcoin made its first debut for trading at the beginning of July of 2010. So as of the writing of this or the discussion of this show here in springtime of 2025, we're talking about the major cryptocurrency coin is 15 years old.
Yeah.
Which I was shocked by. I thought it was like
Same.
5 years ago.
That's my point. Now by the way, if you clicked on this episode at the opening of the show, we had talked about this as kind of the investment. Interesting to note that in July of 2010, Bitcoin came out at a price of 0.0008 per token, just 0.08 of a penny. A $100 investment on its debut could have purchased basically 125,000 Bitcoins, right? And at its peak, that would have been worth, what is this stat you just wrote on here? $13.6 billion.
Crazy.
Which is why, do you remember that story? I don't know if you may not remember this, but this was probably about 10 years ago. A software engineer had a bunch of Bitcoin.
Yeah.
And this made the news that he spent 20,000 Bitcoin to buy a pizza.
Oh, I saw that.
Wait,
Yes.
yes, I have this in my notes. That day is formally known as Bitcoin Pizza Day. One of the most well-known early Bitcoin transactions was the purchase of 2 pizzas for 10,000 Bitcoin,
10,000.
which is worth
awesome.
millions today.
Yeah. This is where I want to start because I have a lot of conversations over 20 years about any security, any investment. It's like, oh, I should have invested in this. Oh, I wish I held on to my Apple stock in the 80s, 90s. Look, we can always play money morning quarterback. So I really don't like going down. It's fun to fantasize. I get that. But I really don't like going down this camp because I feel it brings people into a camp of like feeling down on themselves presently for not doing it. Have you seen those memes where it's like, man, instead of playing on the playground in 3rd grade, I should have been buying my first home. And they make the joke around interest rates, right?
Yeah.
But it's like, I get the humor in that. Don't get me wrong, I'm trying to be all real here, but like I get the humor, but at the same time, we don't realize that subliminally brings us to like a little more of an anxiety or like depressed state, like we did something wrong.
I think those are huge in like my generation because the like cost of living does not match what, you know.
And I get that because trust me, I work with a lot of clients who are under the age of 30 right now and it is a struggle. So I totally get that. But to finish round out the stats, I want to end this because now this segues us into the advisor's world. So I gave you kind of the crypto stats of generational, some things. 22% of financial advisors have allocated cryptocurrencies in client portfolios. And that, by the way, was doubled from 11% in 2023. I found that interesting. So only 2 years ago, only 11% of advisors actually had cryptocurrencies. Now 22.
So a couple of you guys are starting to be like, okay.
Apparently.
Okay.
I want to talk to these homeboys. But yeah, like, it's interesting, right? 40% of advisors report recommending crypto at least half of their clients. This is the last one I want to bring up and we'll get into my points. 96% received crypto-related inquiries from clients in 2024. I'm 100% involved in that stat.
So look at that.
Every year, every week, every month, from all my clients I work with, there's a conversation around cryptocurrencies.
So most of the clients are asking about it,
Yep.
but only, and this just grew, 22% are saying okay.
Yep.
And like the stat I saw is there's just over $3 trillion in cryptocurrencies currently right now.
Yeah.
That's a big chunk of money.
Big.
So with that, you got basically everyone asking their advisors. You have basically a fifth saying okay.
Yeah.
And you have all that money sitting there. What's the perspective of the financial advisor?
Okay.
Why?
Why? I'll tell you why. But before I even go to that point, let me give you a real answer here, as if we were talking at a coffee shop. I'll tell you why.
Give me the real. I want the real, Brad.
The real.
Yeah.
Financial advisors don't hate cryptocurrency. I personally, always speak myself, we don't hate cryptocurrency. But at the same time, can I sit here and say I know everything there is about cryptocurrency? No. It's a new investment. It's been around for 15 years. You think I know? We don't. It's a new asset class. I am aware, let's go to my car analogy as always. If you think of a car, let's say a 5-passenger car, it should be in the car with you. I'm okay with that. It is an asset class. It's been proven. People have it. I'm not disagreeing with that, okay? But should it be the driver's seat? Should it be the passenger seat? Probably not. It might be the back seat, maybe even the trunk. It should be going along with you with this ride, but it definitely wouldn't. And there's a point I'll make in a minute as to why, but this probably doesn't need to be your leading asset, like you're putting all your eggs in one basket. Right?
Sure.
Okay. But more to that, I think advisors actually like, personally, crypto more than they're saying. It's kind of like liking Creed or Nickelback. Like you're pumping it loud when you're driving by yourself, windows down. When you pull up to the red light and there's someone next to you, you're still listening to the song, but you're rolling the window up. That's kind of cryptocurrency to
A little
an advisor.
embarrassed, you'll do it, but you don't want people to know you're doing
Yeah.
it.
I'm not going to be singing, Can You Take Me Higher out loud.
Oh, thank God.
But by myself, I might.
Good song.
No shame.
It's a good song, no shame. Look, they're making a comeback, dude.
Oh yeah, they are.
They got a bad
Stagecoach.
rep, man. They're good.
They do. Anyways, so here are some points that I think to bring up, and this is just on the nose, factual for you to understand. First one I'll bring up is high volatility. Let's just talk about it, okay? Cryptocurrency prices can fluctuate dramatically. We saw that.
True.
2017, you're talking about the high to the low within a year or something like that. That's an insane stat of the volatility, okay?
Yeah.
Would you agree? Right out the gate, managing risk for a client with an asset that has this huge volatile situation is really hard for us to get behind.
And I'll say this, we've talked about my risk tolerance. I have very low risk tolerance as well. And about, I want to say 6-7 years ago, I was in a little crypto trading group.
Ooh.
Secret society.
Secret
Society.
society.
We will-
Okay.
If they're watching, you know who you are.
Okay.
But I remember getting into this, and I was getting into Bitcoin, Ethereum, altcoins,
Okay.
things like that.
So all the ones.
All the ones back in the day.
Okay.
And so I had them in my wallets, and I'm sitting there watching. I had the little app. You could watch them go up and down.
Yeah.
On a daily basis, they were climbing, they were falling, climbing, falling. And if you watch it over a month, I basically was getting an ulcer watching these because of the vast difference of,
Yeah.
it would be up, it would be down.
So
I
here-
could not take it. I had to get out.
Okay, that's by the way, think about it from an advising perspective. Like in general, we are as advisors generally concerned about advising clients to invest in something that has that much volatility. That's just a fact for us. So that's number one, high volatility.
I can see that.
Okay. 2, lack of regulation. Okay, let me be clear about something. I am with many of you. I do like the idea of a closed-end system, no central bank manipulation, no printing. I get that. All for that.
Yeah.
However, unlike traditional financial instruments, ETFs, management funds, or managed portfolios, SEC registered, we have a Securities and Exchange Commission overseeing us. There is a body that oversees making sure there's not anything nefarious going on. I understand many libertarians and many I'm free, you can't tell me what to do. I get that, I'm with you, brother, okay? But understand something, that it's kind of like having society without police. I love the idea of the utopian world, but it's just not, this doesn't have a good track record of that. You might hate on me for that, that's fine. But lack of regulation is a big deal for me.
Being a crypto owner, I'm 50% on this, 50-50.
I knew it would trigger somebody.
Because to be honest, I like that structure,
Uh-huh.
but I also am kind of a prepper at heart.
I get that.
And there are some moves I've made in case, the end of the world happens.
You want to stick around for it?
I'm out.
If there's a zombie apocalypse,
Yeah, I'm out.
take me on your way.
I'm done. I'm good.
I'm a survivor. No, I'm
Okay.
I'm in the fight. But I'm saying there's having a little nest egg over here that's not part of the establishment
I get that.
that could be possibly beneficial to me in a
All good with that. That goes back to my analogy.
well, I
Again,
kind of like it.
okay. And I'm not saying not to like it. I'm just giving you the reasons as to why an advisor wouldn't
Gotcha.
advise on it,
Yeah,
right?
yeah,
But
yeah.
that's a good point. Back to my analogy. Again, dumb car analogy, okay? But remember, it can be in the car with you. I'm just talking about over investing in it or over allocating it to put its importance as the navigator or the driver. That make sense?
Oh my gosh. So my stepbrother, he is in college at UCSB. Yeah. And like
Just up north from here.
just up north. And he, like, no college student has money, you know what I mean?
Yeah, I know, I
but
remember
he put $800 into XRP.
That's like that new one out, right?
Yeah. And when it was like 8 cents a share, and he
Yeah.
comes home one day and he's like, this is how our family's going to get rich. Everyone needs to buy XRP. And I like download that app and I'm like, I don't even know what this is. Like, it exists in a cloud. It's like iCloud. Like, where does it go?
Yeah.
There's no like thing for it except, so I started looking into XRP, and it's a transactional technology, I guess. So if you want to like pay Veronica,
Yeah.
you might go to Zelle or Venmo. If you Venmo her, it takes 1 to 3 days, or you get a fee,
yeah.
right? But Zelle, everyone loves Zelle because it's instant,
Yeah.
But then if you're like cross-border, whatever, if one country's paying another country, there's like an interim period. And so this XRP technology can allow instant transactions from country to country.
Well, that's interesting from a cryptocurrency because that's not just an algorithm. That's actually there's a
It's
fundamental
a
product.
usable
or-
tech.
Right.
Usable
But I think
technology.
there's a lot of them that are that.
There
right?
are, yeah. Not a lot of these are based. We won't get into like there's meme coins, there's
Yeah.
tokens, but I think you bring up a good example of like I've been guilty of this FOMO of when you hear like things like that. I'm like, we're all going to retire if this hits. This is
Oh,
going
yeah.
because you're buying them at what Bitcoin came out, and if you see these go up like
Totally.
200, 300%,
Yep. But remember,
you're making a couple $100,000.
I'm with you, but remember, it's a season, it's a cycle, right? So you could have bought it at that July 2010 marker, but were you holding on to it still in 2017 when it had that huge dip? Like, this is the cycle of an investor in general, cryptocurrency or otherwise. And by the way, look, end of the day, just so you know these points I'm making, already I've talked about high volatility, which is something we don't necessarily like, lack of regulation, right? Because you can't, look, I understand that, but at the same time, you can also see my point of where it also allows for more scams, more risks, more nefarious activities. We can, right?
100%. That's proven.
It's susceptible, okay? That's what I'm trying to say. Whether it happens or not, and that's a separate point. But in the day too, for advisors, like our job, as I always tell my clients, like my job for you is to be not the jack of all trades and master of none. My job is to own what we do. And so I will say this, kind of glowing over these points. My job for our clients is to master what it is we do with modern portfolio theory. I tell people, if I'm the least sexiest person in your financial world, I'm doing my job, right? Because if I'm managing your portfolio, it's long money, it's diversified, it's got growth, it's got value companies, it's got dividends, you got fixed income, you got equities, you got different sectors, all that kind of stuff. That's the long money that's been proven. Okay, that's kind of the historical, which by the way, is one of my next points. There's this unproven track record with cryptocurrency. Now you might argue that, well, it's been proven like for 15 years or whatever it's been. We're talking about the stock market of over 100.
And I will say,
So there's a bigger body of work here.
out of 25,000, you could probably maybe there's a handful.
Yeah, I was gonna say.
It's 40 that are over $1 million. That are valued at over $1 million.
But how many have been around? My point is, what's the average of cryptocurrencies? I bet you it's not much.
It's probably average of that is probably under 5 years.
So let's just, regardless, even if it was 15 or 20 years, we're talking about a scale of something from a proven track record versus, companies. And I understand that you lose all the other things that cryptocurrency brings, which is like, no manipulation from central governments or whatever. I get that. But like, there's a bigger body of transactions. So that's another reason why we're a little bit hesitant, because it's like, look, I get it, but it's super volatile. So I gave you 3 points so far. Okay, high volatility, lack of regulation, unproven track record. The fourth one I want to bring up is our advisor's concern about advising on risky assets. End of the day, I'm a fiduciary to my clients. I have to act always, should be commonplace, but in the best interest of my clients. So I have to also hear them and assess their risk tolerance. Remember we were talking about yours, like you found out you're a little more conservative than you thought.
Yep.
It might be the investment that all your friends are doing, and that's great, but you gotta be careful of the herd mentality. Just because it's good for them doesn't mean it's good for you. And you might miss out on it. I could be wrong. I tell clients all the time, like, my job is to be less wrong more often. Doesn't mean I'm perfect, all right? No advisor should say that, okay? But our concern, which some can say, well, you hate cryptocurrency. No. I'm just giving you my concerns, is about advising on risky assets. Another point I want to bring up that I thought about is complexity and lack of understanding. We've kind of talked about this. It's complex. The algorithm, the binary code, the mining, all that kind. It's definitely complex. So I think a lot of advisors, if they're being honest, which they all should be, and I'm honest with my clients, like, look, man, I know of it. I know enough to be dangerous, but like, I couldn't tell you exactly how it operates enough to feel comfortable to advise you on it.
I mean,
That's right. There's a moral inherency.
We haven't even defined what cryptocurrency is.
I looked it up this morning. Let me pull it up.
Let's get a definition for our audience.
As many people out there would know about it, but how would it read if you were to look it up?
Okay. Cryptocurrency or crypto is a form of digital payment. Unlike traditional currency, which represents physical money, cryptocurrencies are purely digital assets. Although people use it primarily for online transactions, you can sometimes use it for physical assets.
Okay.
I like the definition. It's a digital currency designed to work through a computer that is not reliant on a central authority like a government or a bank.
And I like that. But
There's some more
out.
technical. I think this.
But hear me out. Okay. This is where I'm gonna trigger some people here. By and large, cryptocurrencies still have to be pegged back to a fiat currency for most transactions. Wouldn't you agree?
I don't know what that means.
For
at all.
most.
Fiat currency is a U.S. currency, a Canadian
Wait,
currency.
can you say that whole thing again?
Cryptocurrencies, to use it
Yeah.
for most things you would want to use money for,
Right.
it's called pegging to a fiat currency. You have to bring it back into U.S. dollars in this
Right.
country and use it for something. Yes, there are things out there, I'm sure comments galore, like, wow, but Brad, you can blah, 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 blah. I get that. I'm talking by and large, the majority of things in the crypto assets still have to be pegged back to a currency, and then that currency uses it to purchase it. Correct?
True, but that is growing exponentially as we speak.
And that's why we're writing on this, because I'm talking about what is going on now, and I agree. That's why I'm never say never. I am not going to sit here and say that 30 years from now, this won't be a bigger part of our economy. By no means.
There's athletes now getting their contract
I saw
bonuses.
that. I've actually had some conversations with some of ours around that,
Yeah.
which is interesting. And again, if that's the risk they're willing to take on that, I'm fine with that. Okay, that's because remember, end of the day, you have to make your own decisions on this.
Yeah.
Okay, but the complexity of lack of understanding is interesting. And the last thing is security. They're susceptible for hacking, for fraud, and for scams. It's a computer. People can hack into it, and you can't get it back, kind of stuff, right? Like that's.
It has happened to me with some of my crypto. I
Okay,
had,
yeah,
I had a
see?
small bit of an altcoin in an exchange. That exchange went under for whatever reason, and that is gone. There's no government. There's no nothing coming after it. That is gone, and we see those things of even Coinbase and things that are getting scammed. And
So it's because it's digital, you have some susceptibility with that, right? Now,
that's like the number one fear.
It erodes investor confidence. Yeah. So you can imagine from an advisor's perspective, that's really tough for us to get behind. Okay, now, just for all my haters out there, but Brad, there's companies been going bankrupt and all that kind of stuff. Yeah, look, it happens. I lived through it. If anyone knows my story, I'm aware. Yeah. It affected my family big time. So I'm aware that this isn't just in the cryptocurrency world. Banks can go under, companies can fold, they can go bankruptcy. I get that. But this is very susceptible, and that's a big risk that I think no one can disagree on. It's a risk, right? So look, those are the points I would make as to why financial advisors hate cryptocurrency. That word, I'm not a huge fan of that word. We're not comfortable with cryptocurrency yet.
Do you think you guys will ever get to a point where you advise on crypto?
I'm a never say never kind of guy, so I don't know that we currently don't, but I'm never say never. I think as it evolves, we're not gonna not look at it. We're always looking. We understand it's out there. We get it, but we're not there yet. And I'm not saying that we're ignorant about it per se. I just think that we want to be the long money manager for our clients, and we want to talk eloquently with them about other assets they might have that's not under our management.
Right.
At the point it becomes a managed asset for us is to be seen. So
you want to be the oak tree.
I want to be the oak tree. Yeah, that's basic. That's
the oak tree.
Being an oak tree is like you're solid, dependable, always there. That like robust, strength. You always count on the oak tree.
Right.
And we might be behind the 8 ball on that one. And people will be like, whoa, I got in early. I'm like, yeah, but you were also riding the wave of the lack of liquidity, more scams, more frauds and stuff going on. You're riding the wave of the huge volatility. That's great. And that's when look, end of the day in the market, whether it's cryptocurrency or that, investors should get paid for the risk they take on. That's a general thesis for investing in general. So investing 101, you get paid for the risk that you are okay with. Okay? So if you're open to that, good. By no means am I saying I know everything about it, and by no means am I saying I'm right. I'm just saying from our perspective as a fiduciary, that's kind of where we stand for our clients. And again, also knowing our role. Like I said, if I'm the least sexiest part of the financial journey for a client, we're doing our job. Because if we're that steady Eddie, that oak tree, that kind of long money management, diversified, all those nerdy, boring words you hear all the time, if we're doing that, then we're doing our job. Hey, I hope you guys enjoyed that today. We had some fun with that today,
Yeah, we did.
I thought.
I learned a lot.
Good. Well, hope so.
Well, at least
how we would see it.
your mindset.
About a fiduciary perspective.
The fiduciary, my mindset on this topic, because it's a big one, I get it. But we do appreciate you guys clicking on this video and watching. For our subscribers, thank you as always. We've got more content coming out. We're gonna start something a little new. We read some comments at the start of the show, but leave us some comments, send us some DMs on social media at Mindset with Brad Barrett. This show is to help and provide some education. We can't be your advisor per se through this medium, but we can actually walk through some ideas. So if you have some questions, we're happy to answer them here on the show and at least talk about it with you. So send us a comment, send us some DMs if you will. And as always, if you're not a subscriber, please click the subscribe button, give us a like, send us some comments. We really appreciate it. To all of our subscribers who watch us each week, we're very grateful. And we have more content coming for you each week. And as always, if you lead with love, it's gonna be all right, friends. All right, see you guys next week.